Hello, ladies and gentlemen. Welcome back to another video. First things first, before we dive into today's blockbuster GME prediction topics, it has to be said that this is not financial advice. Anything I say in this video should not be misconstrued as such. And I am not a licensed financial advisor. So I'm glad we understand that. That is out of the way. Moving on now into today's video. Huge one. The GME model has finally moved. It says something different than it has been. I think it's very, very fascinating to look at that. We'll look at that. The huge Chicago trade that fired off. We have more clarity on what that is definitively now, and some tinfoil time. I think everyone's going to maybe enjoy at the end of this video. So without further ado, let's dive in. Now, I wanted to first issue a correction on my video I did yesterday or on December 4th. I did not have enough coffee, and I kept saying someone was selling calls. They were selling puts. Selling puts is inherently bullish because you're basically agreeing to buy the stock at that said price if it dips. So wanted to issue that. Just a coffee mistake, but I'm glad we got that out of the way. So first things first here. There's a lot going on with GameStop, and there was a huge dip on the warrants. And I just want to, say anecdotally here that a dip on the warrants doesn't necessarily mean that the sky is falling and it's over and whatever. These are going to be more volatile than the underlying stock. These are going to trade more in effect like a call option in terms of volatility, in terms of vega, in terms of how sensitive they are to movements. Now, there can also be some shenanigans. I'll touch on those a little bit later, but point being, if you're just looking at the warrants and you see, oh my gosh, they wicked down 26% in a single day, I wanted to my personal thing is, if you're interested in volatility, if you're interested in a rapid rise of the stock or the warrants, or I don't even want to use the S word, but if I'll just say I'm squeeze, and I am not a squeeze guy, by the way. I am not playing for a squeeze. I am invested in a company that I think has the best story in across all US equities. But if that's why you're interested in GME, this is the price action that you'll see. And I'm not saying that this is not what I'm saying. I'm not saying you're going to see a squeeze, but this is the price action that is common with volatility, and volatility can sometimes erupt into the S word. So, anyone that's like, oh my gosh, hang on, this is what you get. This is what you get. So let's just get right into the biggest news before the model, though. 80,000 call block here. Shout out to my boy Ultimator. Found this on the OCC official dashboard, the symbol 1GME. We'll get into what that is in a minute. 80,000 calls for January 20th of 2028. Now you're probably like, whoa, 80,000 calls. That's like 50 million bucks. This is so bullish. That's not bullish, and I'll tell you why too. But this is what that huge Chicago trade likely is. Remember in the video where I said that the Chicago trades are typically matched in dealer hedging with options. We're linked to option trades. This is the option trade. I'm almost 100% confident. OCC, this is the official memo, and we'll get into that, why that trade is not necessarily bullish in a minute. But overall, obviously, I think it's bullish for the stock. We'll get to why. Each warrant, so this is a change to GME options underlying symbols here during the issuance of warrants. So a little bit of notation here. GME1, 1GME1, and 2GME1. There are a lot of new symbols. The only thing that we need to note here is that there is an options class that involves settlement of warrants as well. That's for another day. I can hear people already banging on their keyboards. Is this price suppression, blah, blah, blah. I think there's any degree of, living in reality on this equity, on GameStop. I'm not talking about the option chain. I'm talking about GameStop. Suppression, I think, is synonymous with the ticker. And it's just, whether it's tinfoil or not, that's why I'm all about fundamentals. But we'll get into all that. So this is probably the trade. And let's go over to Super Stonk, because this comment here is perfect. This is from Green Candle Vandal. I've cited them before on other topics, so they definitely have validity. They're obviously, options 101 versed here, but yesterday, 80,000 January 2028 calls came in for 32 strike. The 4.16 million share block that hit via the ask on Chicago Exchange Trade was the dealer hedge. Okay, we got that. That's out of the way. The dealer bought 4.1 million shares. These 80,000 calls were then, we can assume, were bought by the trader. However, these were flex options. Flex options are custom options that can have any expiration date or strike price. And you're probably like, well, how is this even possible? Why does this even exist in the financial markets? That is far too deep of a rabbit hole to go down. Okay, we're not going to get the answer to that. So let's just comment what you think. Is it tinfoil? Is it not? Whatever. But it is what it is. This is in the rules. So they're usually extremely large quantities and are done to avoid moving markets, like the dark pools, okay, showing the trader's hand to build huge hedge in silence or to match custom risk exposures. They offer flexibility like custom terms, giant sizes, hidden execution, etc. Okay, right. That just sounds like a dark pool for the actual equity. The OCC is in charge of clearing these trades, and that's where you can find them. The OCC publishes these flex trades, including the contract details like volume, open interest, strike, and expiration. So I watch Unusual Whales every day for notable options trades on GME, which we'll get to. There's a huge one, by the way. We'll get to another one later in this video, but it's not popping up there. Why is that? Because this is an OCC flex trade, a custom trade. So the January 28, that's 2028, 32 strike had a delta of 0.3539. When you multiply 80,000 times 53.9, you're multiplying the delta there, you get 4.3 million shares. So it's very close to the 4.16 million hedge that were bought yesterday. So that is a perfect explanation of where those came from. You can safely conclude that their share purchase was the dealer hedging the sale of 80,000 calls. Why would you buy shares? Because you just sold a ton of calls. You just sold calls, so you better buy the shares. That means the trader bought 80,000 calls from the dealer and the dealer sold them. So this creates the dealer position that can amplify upside moves later because if price rises, delta will rise. Delta hedging, okay? It's something I talk about frequently. As delta increases, the dealer needs to buy more and more shares to stay hedged. As price rises, the dealer also becomes increasingly short gamma. Being short gamma forces continuous buying as the price rises. This amplifies volatility. They're saying at the end here, this is how a gamma squeeze intensifies. It sets parabolic moves up. Well, I am a little apprehensive about saying gamma squeeze just because I think people take that in the wrong way. The thing I think is most important is looking at max pain every week, looking at GEX and seeing what strikes. I'm talking about regular GME options here, not these custom scam flex trades, whatever, that retail's not privy to. That, okay, if, GameStop's max pain is 21, whatever, and there's a huge call wall at 23, prices at 22.90, it breaks about 23, dealers have to hedge that. Market makers have to hedge that. They will buy shares probably Monday for delivery if anyone's exercising. That's what I pay attention to. Gamma squeeze, that could be, but you need to see the regular options train pop off a lot more than it is now. So first comment here, there are way too many instruments in this financial system. How about we just go back to buying and selling shares? I mean, I agree with that in theory. It's just we're too deep. You're not going to, that's like saying, hey, we need to fix the government. You're just not going to, you can't even do it. You can't bark up that tree, right? It's too big. It's too deep, man. Sorry. And that's not defeat us. It's just we have to learn how to play with the rules and with the tricks that are being thrown at us. So this is, a good thread to read. There's a lot of comments here. It seems risky to be the dealer. Maybe, I guess. I'm not sure why, you make a trade of this size, but, it's interesting. So it's saying before you thought the trader sold these calls to the market maker. Now you're saying the trader bought the calls from the market maker. And he said, I made a mistake and the logic got messed up. And then, he remade the post. So short gamma, delta just up, big whale stepped in. Who's the whale? I don't know. Let me know your thoughts in the comments below. It's definitely intriguing. Now, this comment here, last thing before we get into the model. If you're telling me the big boys are going to keep this below $32 for the sake of the market and idiosyncratic risk. So, they're basically saying if these were sold calls, this is bearish, and they're betting that the stock is not going to be above 32 in 2028. Mark my words now, and this is my opinion. If the stock is not above $32 in 2028, and there's some semblance of decent macro at that time, then Ryan Cohen and company just haven't done enough to increase revenue. And that's the bottom line. What I want to make clear about the warrants and the options and this, that, and the other, and the dark pools and the shenanigans. Focus on the fundamentals of the business and all these things, which are extremely relevant to track, by the way, and are more important. It's, by the way, this positioning, this kind of inflow, this size trades, this is more important than technical analysis, than just about anything. Okay, the most important things to me are swaps, the notional side swaps, legacy baskets like IWM, fails to deliver, all of those things, and then fundamentals, period. Point blank, period. You're always going to have macro. You're always going to have, the Fed and, some people, sometimes it's dovish, sometimes it's hawkish, and sometimes there's dissent, and you're always going to have that. The business, Ryan Cohen and company, the business, as long as they are improving the business, you're going to see, hopefully, the shenanigans come down. Wall Street's going to have to flip their tune eventually and buy in, sort of like they did a la Tesla when Elon Musk released those funny shorts, kind of a dig at the shorts, the red shorts, when they started producing revenue and really hammering that quarter after quarter, and they gave good forward guidance too. That's something that GameStop does not do, which is probably a critique in and of itself, right? It is. I would like to see something. I'd hear something, but the quarterly reports say enough for me to still be an all-in investor, right? In the stock market, but I think that there's always going to be shenanigans. And Suzanne Trimbeth, if you're not familiar with her work, she's probably the best author on fails to deliver, the shenanigans. She is saying, this is from yesterday, December 4th, watch for a sharp increase in settlement fails towards the end of the year. She's citing the U.S. Treasuries and 97% from 5 to 10 big banks, and pushing close to $500 billion, including fails of the DTCC. And if you've read the literature, if you've read the rule book, if you've read the handbook, that's where this kind of IWM legacy stuff comes in. That's where special trades can be marked. It's a whole litany of things that don't seem to benefit retail. And we can put it like that. I think that's a very fair interpretation. But moving on, so that big option trade, that big Chicago trade, that's where it came from. We'll see how it plays out. Directionally, I think it's bullish. Anytime you have $100 million hitting off in Chicago, it's bullish. Is it going to move the underlying? Well, if those calls were sold, it's going to remain more delta neutral. And I would think in effect that it would have a lesser impact in a price spike. Now, we'll see though. We'll see. Let's see. GameStop has a great quarter three, $1 billion in revenue for the quarter. And we'll see what the model says. See what the model says. Okay, don't take it from me. Eric Trump says, American Bitcoin keeps climbing, 2 more down, next GameStop. He's not saying, I read this wrong the first time. I thought he was saying for GameStop to buy more Bitcoin. He just has GameStop in their sights now, American Bitcoin to overtake GME in their Bitcoin holdings. Yeah, I wanted to touch on that because maybe we'll see, if GameStop bought or sold anything Bitcoin-wise in this previous quarter with the report. I wouldn't have expected them to, just because of the cap gains tax nightmare situation. So we'll keep an eye on that. But I wanted to, it's funny that like GameStop, in October had that sort of collaboration on social media with the White House. Eric Trump's talking, there's something going on. It's a bit obfuscated, but there's something there. So we'll keep an eye on that. Remember Ryan Cohen, Trump, he was all about that on X leading up, during the election, this, that, and the other. So we'll see. What is Ryan Cohen cooking? Let me know in the comments. Obviously, power packs, in my opinion, I know tangential, they've been a good success so far. There's just no way to spin that. Lunar packs sold out. So that's very good. We'll see what more he's cooking, if it involves government officials. If not, the U.S. government, take a stake in GameStop. Okay, if this administration wants to say they're for market security and transparency, what a better company to take a stake in. Okay, that's not financial advice. 1.954%, Japan's 10-year yield. Holy moly, this thing is out of control. It keeps going up. I am not a market crash doom and gloom person, ever. I think macro is quite good right now. companies' earnings are extremely healthy, especially in big tech, which is propping up the broader market. This is concerning. This is concerning. This is something to really keep an eye on, which would be really bad for the market, really bad for big banks, probably, presumably, anyone with tons of derivative exposure that's not hedged. But ultimately, GameStop sitting on cash, you know that I think this is bullish both ways with, extreme panic, though, short term, if anything really fires off here. Larry Chang, funny tweet, and then we'll get into the model. Kind of insinuating that Ryan Cohen could be a psychopath. I think it's hilarious. Larry Chang's also, I think, CEO of Volition Capital, so, could be kind of double entrada there, but just good to see the leadership having fun as we approach earnings. Just wanted to throw that kind of lighthearted joke in here. GameStop warrants have a Len pool. Okay, so the first thing I said in the video, GameStop warrants flash crash down 26%. There's a Len pool. I don't know how this person found this, but there's a borrow fee. Okay, 31% borrow fee on the warrants. The fact that there's a borrow pool, a Len pool for the warrants shouldn't surprise anybody here, but it is what it is. I'm not going to be the doom and gloom guy. I'm going to continue to beat the drum that if the company executes and grows revenue and keeps their profitability humming along like it has been, I'm trying not to use the buzz phrase. What is the buzz phrase I use? I'm trying not to use that this video. If they keep doing that, I'm a lot less worried about this backdoor special trade BS. I just am. Okay. Focus on what matters most, fundamentals. 5,000 blocks, 20 strike calls, or 20 strike puts. I did it again. I have not had enough coffee. 20 strike puts sold for October 16, 2026. Why is this important? Because this trader is betting that GameStop is not going to be down there at this time. If it is, they're buying a ton of shares. Okay, automatically buying a ton of shares. It's also around the initial warrant expiration date. I say initial because they can extend it. GameStop can extend it. That's another thing that people should know. GameStop can extend the warrant expiry. Please be aware of that. But this is huge. This is 5,000 block. We know who trades in those increments. Okay, is this just a waiting game for Roaring Kitty? Is this him saying, hey, I'll park some cash here in these puts, cash secured puts. If they fire off, I've got a ton more shares before the warrant expiry. Very interesting. Something to keep an eye on. That's a neat 5,000 block, by the way. That is confirmed 5,000. I have a post on my X account too. Showing that. GameStop's green streak was snapped nearly 10 trading days in a row. It was going for an all-time record on the equity. So something's happening. Now, price, yeah, it's at 22.90 something. Not good enough, but good start. Last thing here. I promise before we get into the model. GameStop tries anything for foot traffic. This is a headline from Guru Focus, another complete phony website. Horrible content. Don't even bother giving it a click. This is not what's happening by Trade in Anything Day. GameStop has tremendous marketing. They are the #1 brand in gaming. They are marketing machines. This is not what this is. GameStop is doing this for marketing. They're doing this to potentially signal a shift in their business. Maybe they're going to try and be an eBay competitor. Maybe this is in-person loot boxes. Maybe this is some sort of test. Either way, this is great for the business. This is not foot traffic, okay? I don't see anything about power packs in here, right? It's pathetic. Okay, the model. The GameStop model. Richard Newton's model. For a while, it was not moving. Now, if you're new to the channel here, first off, welcome. Thanks for being here. Thanks for the thumbs up, for the comments, the subscriptions. That's awesome. But the model had been a little not functioning, right? And you can say a little, a lot, or whatever. Who cares? But it wasn't really matching up, right? It was for a while. It was for a while. Like here, I was like convinced, like, okay, he cracked the code, right? Cracked the code. And here I was like, okay, yeah, we got something. I was even more sure, like right here. And then it kind of went haywire. The model's now saying December 22, 2025, $32.69 move. That's just what the model's saying. Why is it saying that? Well, let's look at what changed, okay? Couple things here. And this is updated by someone. This is what I was going to say on Reddit, on Superstock. They're definitely doing a service to the community. I think they're talking about some really interesting things. They also keep a log And the sheet is very slow to load, by the way. They keep a log of everything they're doing in here, so you can follow along. You can see what they're doing. The swap tracker model was updated November 9th. The ETF model is being updated daily. This is an automatic script, by the way, that this person's running. So they're not inputting this manually. This is the confirmed data. I've quality assured it. It looks really good. You can see here that the combination model too is having a couple of spikes, and we'll see. We'll just see if it gets there. $30. It's saying it should be around there now. So we'll see. Me personally, and I like to just put my personal spin on these things, interject to do so. I'm shooting for 26, 27 bucks. Maybe looking to sell some covered calls, into volatility. That's really all I'm doing because I want to increase my overall share count. Is it going to rip it to 30 bucks? It could. It could. I hope it does. I hope it does by the end of December. A little bit of redemption yesterday on XRT. Very interesting. But creation across the broader market and on GMEU. So, to me, that's usually when you get like a little bit of a sideways or red day. It's like, okay, we're trying to balance things out. We're trying to control. And, they're pretty good at it. You gotta tip your cap. Is the people, the forces that be have obviously been in the game. They've been around the block. And I think post squeeze, they've really found ways to shuffle all of these things. But I highly encourage everyone to dive into this. Now, the Echo tab hasn't really changed much. We don't see a big blip on the sum cleared because guess what? There hasn't really been clearing volume lately. And this is something I've said in a previous video, but if you just look at GameStop's chart, which by the way, what's interesting also, Ultimator released a new echo chamber kind of fractal match, 81% correlation to late November of 2020. That's pretty good. Now we'll get to some like extreme 10 at the end of this video that says something much bigger. I'm not going to spread the copium though. I just think Ultimator's done tremendous work for the community. The indicators he puts out with the bottom finder and all of that, very good. So this is just another one. I wanted to give him a little shout out here for this work, but it kind of just corroborate with my prediction of pop up to 26. This is not saying anything for earnings, which would be super surprising, although it is dipping after, which, if you've been around GME, you kind of used to a post-dip earnings off a great report, double beat, post-dip earnings, of course. And that would, maybe be in the form of preferreds or bonds or this, that, and the other. And I just really personal opinion wise, I don't want to see more bonds. I don't want to see more bonds. I do not want to see more preferreds. I do not want to see more preferreds or any preferreds. Sorry. Look at MSTR and preferreds. It's a mess. So let's see what Ryan Cohen's working on. I'm not saying don't dilute in general. I think the dilution has been net positive for the company, obviously. But, not that I'm tiring of it. I just would want to kind of get an idea of where the capital is going to go. I think that's very fair to say that. I'm not, that's not really a critique. That's kind of like, just kind of hoping for the best. So that's what Ultimator's new thing is saying. But there's not been any volume in here to clear any of these fails. There's not been any volume. And yes, maybe the second bond offering, 100-some million, 172 million volume, maybe that was a huge clearing moment. Maybe it could have been. But there's still been some big ETF fails since then without any clearing volume. And this earnings here, I don't think was enough. I just don't. What was that, 40 million? Yeah, 46 million. I don't think that was enough from some of the numbers I've seen. So we'll see. We'll see. Either way, I'm excited. I think, ultimately feeling pretty bullish here. One more thing about the model that I wanted to highlight, I think is very, very interesting. In their data tab, they have a little note in here. We'll get to that in a second. They've also put in some IWM type swap. And I don't know if this is an official input, but it says, look for a drop on December 5th from a September 23rd IWM swap created. They say they don't think it's going to work, but I'm very much liking that they are digging into IWM swaps, because if you've been watching my content or following me on X, I think Richard Newton was bang on by linking IWM and legacy GME fails when IWM once contained, when GME was once in IWM. I still think there's something there. And huge fails, billions of dollars worth of fails on IWM over the past couple of years, and really started firing off when Roaring Kitty dropped his joint position. something is wrong with IWM. And IWM, by the way, if you're just a regular market person, is great for small and mid cap rotation, sector rotation, and it looks really good. Looks very similar to 2020. DTCC website, ETF processing. Everyone that watches these videos needs to read this page. Just want to show one thing. So, benefits. Allows members to create or redeem a customized standard portfolio by substituting the underlying components, the underlying security. So forget the GameStop shares. You don't need to return these. Substitute with cash or by replacing those shares with other securities that are eligible to be processed at the NSCC. Scam alert. This is in the rules, people. Okay, so when anyone, when all the, I think some of the TA grifters, and I like TA, I do TA, but a lot of them propagate this notion that there's nothing funny going on. Read the rules. If you just read that and you have any semblance of understanding of how things work, you just realize that you can, we just drained all the GameStop and XRT. Yeah, well, let's fill it with something else. Fill it with Sprouts Farmers Market. That's equivalent, per the NSCC. Sure. Allows members to create or redeem a portfolio either against cash or through the exchange of securities. Oh, we can't get the GameStop, but here we have some cash from lending GameStop. Let's put it in here. That's good enough. That's satisfied. Kick the can, la-di-da, sing kumbaya by the campfire. Who cares, right? It's in the rules, right? So Ultimator, his new echo chamber on SPY showing a mega crash down to around 420 or 400. This is pretty funny. 70% correlation. I only share it because the Japanese carry trade, this would stink. But let's just be honest. And then it rips up in a couple, squeezes. It squeezes up to all-time highs. I mean, this would be the most fun ever in the markets. And yeah, people would be stressing out. I'd have more gray hairs than I already do from all this. But hey, GameStop Corp buys the bottom on SPY, becomes a hedge fund. All right, sign me up, baby. IWM, real quick. I wanted just to highlight the similarities. And this is from Gareth Barry on X. I'll open this image so you guys can actually see this thing. But it looks very similar. IWM setting up very, very well. So we'll see. That ultimately that is very, very good for GameStop. So the tinfoil was kind of the SPY fractal. And then I'm going to pull up, last but not least, Ultimator's kind of squeeze scenario for GME stock. So, I mean, I don't know if you want to give this any credibility, any real verifiable, hey, this is what it is, but this is what the fractal is showing. Sorry, it's blurry. I don't know what happened to this image, but it's an 88% match. I don't think we're squeezing past 140 in the next couple of weeks. I mean, that's, if we do, amazing. We'll do a live stream and cheers like Roaring Kitty used to do, right? But I hope so. I just don't think so. But Ultimator, it's like the Dumb and Dumber scene. So you're telling me there's a chance, and then it's a 0.0000001%. I'll take that. If we get that kind of price action, I will take that. It would, I think, need something material for the company as well. But to put a bow on today's video, the crazy Chicago trade, what does that symbolize to me? Well, it symbolizes that if you strip out the odd components and the rules, that the OCC is saying, custom this and that, custom strike, custom day, whenever it expires. Strip that away and take it at surface value. Someone's putting $100 million of capital into GME. It was the 25th largest trade in the entire market when it went through. Dealer hedging, fine. That's all well and good. You have to do it, right? They might not have done that, by the way, partly in April of 2024 and into May of 2024, if you know what happened then. Part of the reason why I think there was a huge run, but mostly legacy fails. So you have that huge money being thrown around on what the mainstream media wants you to think is, forget GameStop. It's a brick and mortar. It's a dying retail. Huge money. That signifies something's going on. 2, and ultimately, above all, most important, the bottom line of GameStop's business has improved. Their stock-based compensation has come down. Their dilution, yes, has gone up, but it's sitting in a money market collecting 5%. They've also bought Bitcoin to hedge against inflation. They're clearly signaling that this is a different company. So it's different financially. It's different in their cash holdings. It's point blank period, a different story than 2020. A requel rhymes, but still has nuances and differences to it. Will there be one? Buckle up and we'll see. Ultimately, most important thing, focus on what Ryan Cohen, Larry Chang, and co. are doing quarter after quarter